Hi there, good afternoon. You're tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Welcome back, Vinny, onto the show. And markets definitely pretty much subdued in today's trading session. Remember, the effect that we are seeing in the US, in the Indian markets, is a reflection of what happened actually in the US markets overnight. Remember, the banks actually were hammered out of shape in the United States, and that's why Asian banks are also under pressure. And ditto coming in for Indian banks as well. As you can see, 0.7% downtick coming in for Nifty Bank as we speak. Taking a deeper look at the markets right now, you use the small cap index that's actually maintaining that positive stance since the word go. You have the small cap index that is continuing to trade with a positive bias, 0.4% uptick coming in for Nifty small cap index, while mid cap index is trading flat with a negative bias. Talking about the sectoral indices, then is the realty index that is the top sectoral loser, followed by PSU Bank as well as FMCG is seeing down to about 0.3%. Let's talk about the sectoral gainers then in trade today. And media, metal and pharma are the ones that are holding on to some strength in today's trading session. So that's the way how the markets are looking like at this point in time. As you can see that the benchmark indices are under pressure, and we're actually maintaining that particular level. We're not seeing a sharper fall from where we are, Vinny.
Absolutely, but on that note, let's get started with those individual movers in trade, either on the back of news flows or on the back of technicals. And on the technicals, we're joined by Nagaraj Shetti, while from the research team, we're joined by Lisa as well as Vamakshi. A very good afternoon to all three of you all. Good afternoon to you as well, Cheryl. And as always, the first stock that I'm going to be talking about, the first stock, that's going to be IdeaForge. Now, IdeaForge Technology, newly listed company when you look at it, but the numbers that have actually come out, nothing exciting there, and we're seeing a fall coming in the stock price as well. We compare the numbers on a quarter-on-quarter basis. The revenues are down by almost 2%. 99 crores was last year. This time it's 97 crores. When you look at it in terms of the profits of the company as well, that's seen a sharp fall as well. And the profits of the company on a quarter-on-quarter basis have come in at 1.8 crores versus 4.12 crores last quarter. So down by 54%. And that sharp fall in the profits of the company is something that is leading to the fall in the share price as well. Margins of the company too seeing a sharp contraction, 2.8% versus 5.3%. This is the EBIT margin that we compare. And on the back of this, we're seeing that IdeaForge today is down and out in trade after a weak set of numbers was reported by the company.
All right, moving on then, let's talk about the next stock that's in focus, and that is Dr. Reddy's. The pharma major today has hit a fresh record high levels in the trading session. If you look at the stock price, it's also trading higher by about 2.6 odd %, and that was actually a record high level. Also, that made the stock among the top gainers on the Nifty. As you can see right now on your screen, the stock is trading higher by about 3%. What's happening is the fact that the analysts have given their take on what is happening in the generics market. And let me take you through that. You have analysts that have told agencies that Dr. Reddy's could be seeing an uptick as pricing situation is actually getting better in the US generic market. Also, what they are saying that you had Jefferies that came out also with a note on July 26 on Dr. Reddy's post this earnings, and they said that the company is in a favorable pricing environment and sales in US is likely to be steady. So on back of that, you've seen Dr. Reddy's actually gain. In fact, after earnings itself, you've seen the stock gain as much as 6.7%, and also today also the stock has hit a record high level, biggest intraday gain coming in for the stock since January 27. So yes, a strong up move coming in for Dr. Reddy's in today's trading session.
Absolutely. No surprises there when you see that they're hitting new highs coming in over there for the pharma names. But yes, on the back of news flow, Dr. Reddy's in focus. But let's talk about Happiest Minds. That reported its numbers. And when you look at it from the morning gains, Happiest Minds has actually given up those gains. But to understand what should we be expecting from the company going forward, we're joined by Venkatraman Narayan, who's the managing director of the company, while the CFO of the company, Joseph, is also joining in with us to talk. I beg your pardon, Vice Chairman, Executive Vice Chairman of the company, Mr. Joseph, is also joining in with us. A very good afternoon to both of you gentlemen. And talking about the numbers, Joseph, first coming to you, the slowdown is there in the industry is no secret. Now, but the question is actually how are the incremental conversions actually shaping up for the company over the last couple of months? Also, how has the conversion changed, improved or worsened?
So, if you look at the demand, I think, first of all, customers are being very cautious and deliberate in their spend, just given the environment. But having said that, what we are seeing is that customers are continuing to invest in some of their digital initiatives, and they're being selective about it. They're looking at initiatives that will give them near-term advantages, either in terms of revenue growth or cost optimization. And as you would have seen from our results, where we were able to do a 4.7% growth quarter on quarter and have 18 logos, being a little selective and targeted in what offerings to take to which customers has helped us to acquire business and deliver the kind of results that we've been able to deliver.
Good afternoon, gentlemen. This is Cheryl also joining in the conversation. Let's talk about the Q1 growth. It has slowed down a bit. Are you all still confident of a 25% growth guidance going ahead?
Like we mentioned, the guidance growth of 25% has elements of organic and inorganic growth with it. And the inorganic piece obviously plays a large role in we being able to meet that number. We are pursuing about a few good acquisitions. We've got a decent pipeline, and we haven't been able to close any of them until now. The target was to close it in the first quarter. We have not been able to do that. Hopeful that we'll be able to do that in the next couple of quarters, which is why we have said that post the end of the next quarter, we'll do an assessment and come back to all of you and talk about our growth guidance and how we are tracking against that.
Okay, Venkat, could you give me a bit more and give us a few more details in terms of the M&A pipeline? What would be the nature of these M&A pipelines, the size, the timeline, anything on that?
The companies that we are looking are all 100% digital companies. They are in the size range of between 10 to 45 million dollars in size. The average, there are about 3 to 4 companies in our pipeline that we are quite keenly pursuing, and hopeful that we'll be able to close at least 1 or 2 of them quickly in succession this year. They are all 100% digital companies, like I said, profitable, working on the India-US axis in the new age technologies of low code, product engineering services, working in high-tech environments, just like us. So there's a lot of alignment that I see between the companies that we are pursuing to what we are doing. But at the same time, they target certain different markets, verticals, and have certain good customers, which is what we hope to bring on board with the acquisition and then grow further into that.
Right. Venkat, let me ask this question to you. Are you seeing any internal hurdle return rate that you're actually targeting on these acquisitions? And will these acquisitions be return and EPS accretive going ahead?
Yeah, our return on capital employed is about 25%. You've got my return on equity is about 33%. These are internal thresholds that we have. But at the same time, thresholds being what they are, you have to assess them basis the target. And sometimes you can go a little higher on those or lower on those basis the kind of companies that we have in our pipeline. So, but largely that is the kind of internal threshold that we have when we do the assessment of cash flows, discounted cash flows, and valuation.
Also, will margins stay in this 22 to 24% band? And I'm asking this because there are salary hikes and acquisitions that might impact it as well. So could we expect it to stay in this range?
We have given a guidance of 22 to 24%. And it does take into account the aspects of acquisitions that you talked about and the wage hike that we anticipate. And it's as per a planned cycle. It's just despite that such guidance that we have beaten that guidance for 13 quarters. While we are proud of that, we are also aware of the fact that things are slowly coming back to the normalcy compared to what you had credits in the COVID time. For example, most people working from home meant a lot less investment in travel and in rent and in a lot of those SG&A costs. which is slowly coming back, especially for a company like us, which has got about 80% of our people coming back to work and working from office. So, which has meant that we make investment in facilities in Pune, Noida, Bhubaneswar. We are expanding our facilities in Bangalore. So all of that are costs which we did plan for, and which is slowly coming back. And that's why we have been holding on to this guidance range of 22 to 24%. And we are confident of meeting those numbers, Anisha.
Thank you so much, gentlemen, for joining in with us this afternoon on ET Now, giving us an understanding of what we should be expecting from the company in terms of margins and M&A deals for the company as well. Thank you so much. But that was Happiest Minds management for you all. But let's move on and mark the flashes that are coming in on your screen, and that is the AMFI data. What we're seeing coming in overall is that the net inflows have come in at 82,046 crores versus an outflow of 2,022 crores in the last month. Total AUMs are at 46.3 lakh crores. Equity inflows are coming in at 7,626 crores in this month as well. Overall, you're seeing that the flows have been impacted by the liquid funds inflows worth around 52,000 crores, as well as the inflows are seen in liquid and short duration funds. That's the highlight that we're getting in. Other than that, inflows of around 4,171 crores is in the small cap funds. We've seen these mid small cap funds last month also. We've seen similar trends coming in as well. That seems to be continuing in those small cap fund names as well. The inflow has continued over there as well, and they are near multi-monthly high levels over there. So yes, keeping an eye out on that. That's the update that we're getting in terms of the AMFI data as of now. Keeping an eye out on those numbers over there. We'll wait out for the SIP data, SIP data that will be coming out on the call later on. We'll keep you all updated with that. Let's move on and keep it going with the stocks that are buzzing in trade. And on the technicals, Nagaraj, thank you so much for joining with us. Good afternoon. And the first stock that you have picked up for us today is Latent View. What is the view in terms of Latent View now? What are you expecting in terms of the charts for the company? Should we expect a run up here?
Hi, good afternoon. Latent View has been in a consolidation mode, and we have seen the larger rebound action over the last few months, and recently 390 to 395 was a strong hurdle, and the stock was hitting those hurdles and was not showing any intent of a sharp decline from there on. This week, we have seen a good amount of upside bounce, and currently the stock price is placed at attempt of upside breakout of 390 to 95 levels. I'm expecting this to show a decisive upside breakout over the period of time. On such a breakout, I'm expecting this to reach the next overhead resistance of around 450 in the next few weeks.
Okay, well, moving on, let's shift focus to Shelley Engineering. Vamakshi, over to you. Why the stock is buzzing in trade today?
Well, Srishti, the stock is buzzing in trade today because on the back of its numbers, we're seeing a very sharp run-up coming in as far as this counter is concerned. Now, revenue was actually down nearly 10% on a year-on-year basis. It has fallen from 175 odd crores to 157 odd crores. But it is actually the operational performance of the company that has posted quite positive results. EBITDA has come in nearly 19.9% higher at 27 odd crores. The net profit has also seen a marked improvement, 33% higher on a year-on-year basis, and the margins have also improved by over 400 basis points from 12.7% in the same quarter last year to 16.9%. So all in all, good margins, and that is the reason why the stock is abuzz in the trading session today. As of now, the stock is definitely a little off the day's highest point, but holding strongly in the green with gains of around 11.5%.
Let's move on and to the next stock on the charts. And Nagaraj, you're picking out Godrej, I beg your pardon, Crompton Greaves Consumer Electricals. And why is this one on your list? In the last 6 months, has not done anything exciting in terms of returns. A 3% downtrend, so almost remain in that range. What should we be expecting from CG Consumers?
Yeah, if you look at the long-term charts of Crompton Greaves CG Consumers, and what we can observe is a great level of underperformance in the stock price has been continuously in a downtrend over the last, I think, 7-8 months. And I believe that a recent bottom swing low of 251 in the month of March and April, I think this is going to be a good bottom reversal, and significant turnaround from since then has happened for the stock price. The stock price has recently moved slightly above the immediate resistance of around 299-300 level, which happens to be a bullish flag pattern. technically overall chart pattern is developing, and I'm expecting this 251 of last March is to be a good, a strong bottom reversal, and we are likely to see a significant upside from here. So a decisive move above 300 to 305 is likely to open door for sharp upside momentum for the stock price, and the next overhead resistance of around 340, 345 is going to be reached in the next 1 month.
Okay, moving on, and let's shift focus to Tasty Bites now. Lisa, tell us why this counter is in focus today.
Yes, it's on the back of results, and Tasty Bite has hit an upper circuit of around 20% today on the back of very good set of numbers. The revenue was up 30% on year-on-year basis, stood at 154 crore. Even the EBITDA, that saw a triple-digit growth, and it was up at around 136% on year-on-year basis. Margin saw a significant improvement and stood at around 21% from 12%, which was seen last year. And even the PAT growth was quite significant. It was up around 173% and stood at 21 crore. The stock has hit an upper circuit on the back of good set of numbers. It has gained the most in the last since the last 5 years. The biggest single day gain was last seen way back in January 2018, and even the volume was quite strong on this counter. It was 12 times the 20-day average. So that's why Tasty Bites is it's up and above in today's trade, and it's in focus today.
Okay, let's move on and talk about Affle India. And Nagaraj, Affle India on the charts, how is that looking? In the last 6 months has remained in the range of 900 to 1100. Should we expect it to move past and run up ahead of this 1100 mark, which is it is around at?
Yeah, if you look at the chart from January to May, this stock has been in a downtrend, and after that it made a bottom reversal around the 866 levels in the month of mid part of the May, and moved up since then. Currently, what pattern is looking out over here is the bullish flag breakout pattern, and after the sharp up move, the stock has shifted into a consolidation, and the consolidation resistance of around 1110 has eventually been broken, and this is going to lead to a sharp up move for the near term. I'm expecting a further upside moment, and a move above 1170, 1165, 1170 could be a sharp upside breakout of the trend line resistance as well. So overall, the positive development is happening for the stocks, and I'm expecting this stock to reach up to 1200 to 1220 levels in the next couple of months.
Okay, let's move on and talk about Radiant Cash. This one isn't focused on the back of its numbers. When you look at it, the revenues have seen a growth of around 11% on a year-on-year basis. EBITDA, on the other hand, the operational performance, that seems to be a bit weak because margins have seen a sharper contraction. But even the EBITDA has seen a downtick of around 12%. Let me talk about the EBITDA margins that have come in at 20.3% versus 25.6%. So on a year-on-year basis, a sharp contraction in terms of the margins of the company. Even the profitability of the company is down by 7% as well. So yes, on the back of this, yes, revenue has seen an uptick. We saw the stock actually starting to see a recovery coming in. Operating performance seems to be a bit of a weakness there.
Okay, moving on, and let's shift focus to Maharashtra Bank then. And Nagaraj, tell us, why have you picked this counter? How are the charts looking like for this one?
Yeah, chart pattern of this Maharashtra Bank is looking quite positive, and we have seen a continuous uptrend without showing any reasonable downward correction in between over the last 1.5 months, and this stock has placed at the higher levels. Though it has placed at the higher levels around 36.50, 37, there is no indication of any significant reversal pattern building up at the higher levels. So I'm expecting this uptrend, upside momentum to continue for the near term, and this stock is expected to reach up to the next resistance of around 40 in the next 1 month.
Okay, moving on, and now let's talk about PB Fintech. That stock is down in trade, and that's after Macquarie come out with its note where they have initiated the coverage on this particular counter with an underperform rating for a target price of 560 rupees. That's actually more than 20% lower than the current market price. Though post this note, the stock was at one point in time down as much as 5.5%, but seemed to be recovering and now down about 1.93%. And what Macquarie is highlighting is this note that the market is actually underestimating the risk coming from the regulator's Bima Sugam platform, which could be a big disruption, and that could be a threat to a company like PB Fintech. And the target price that they have come out with is 560 rupees, and that's why PB Fintech is in focus today.
Surely keeping an eye out on PB Fintech today. But let's move on and talk about an IT major. And Nagaraj, TCS, finally, I'm seeing one of these big IT names coming in on the list of technical analysts. Normally it was those mid-cap IT names. Yeah. But today, seeing TCS on the list, do we have some hope of a good recovery expected on the charts here?
Yeah, of course, the IT has witnessed a significant turnaround recently as a sector, and we have seen the larger consolidation movement, and the sector itself is making an attempt to break out of the large consolidation band. If you come to TCS has been in a range-bound action over the last couple of months, and recently it was hitting the overhead resistance of around 3,500 to 3,550 levels repeatedly, and was showing higher bottom kind of a thing. So now currently again reaching towards 3,500 to 3,550. I'm expecting this time this hurdle of 3,500 to 3,550 to be broken on the upper side. On the happening of this decisive upside breakout, I'm expecting 3,700, which is the next set of resistance for this TCS over the period of time.
Okay, moving on, and let's focus to Shyam Metallics then, and Vamakshi, tell us why this counter is in focus today, and the stock is already inching higher with the gains of 7.5%. What's the reason?
Well, Srishti, you're absolutely right, and in fact, not just that, the stock has hit its all-time high today, and that is after the company came out with its sales operational data. Now, during the last month, Sponge Irons did see an increase of almost 37.2% as far as sales volumes are concerned on a month-on-month basis. Their steel billet, however, decreased on realizations of steel billet by almost 4.7%. The volume too saw a slip of almost 10.6% as compared to the previous month, and that was mainly owing to the fresh facilities that were coming up in finished steel. Long steel, the volumes, however, out here were up nearly 5.3% on a month-on-month basis. So all in all, it does look like a good operational update from Shyam Metallics, but we have a note coming in from SBI, and they're appearing to be quite bullish. SBI Securities rather, and they're appearing to be quite bullish on the stock with a target price of 535 per share. They have highlighted that the brownfield expansion in the existing facility as well as the greenfield expansion for coated sheets are some of the key triggers ahead. As far as sales is concerned, they're expecting a CAGR of almost 30%. As far as PAT is concerned, they're expecting a CAGR of almost 41% from FY23 to FY25. So all in all engines firing for Shyam Metallics, and that is the reason why the stock is up nearly 7% in trade as of now.
Okay, let's keep an eye out on that one. But let's move on and talk about Biocon then, and a pharma name, Nagaraj. The pharma pack overall has been buzzing, but when you look at Biocon, it's not run up as much as the other pharma names have in the last month specifically. What is the view on Biocon now, and what is the run up that you're expecting?
Yeah, of course, rightly said that pharma was buzzing and Biocon was the one left out. And currently, what I'm expecting is Biocon to pick up its upside momentum in the near term. Recently, it has shown some promising chart pattern, consolidation movement, initially upside momentum consolidation pattern, and again this week we have seen an attempt of upside breakout of the consolidation movement. So overall chart pattern is looking positive, and this stock is expected to move towards the next overhead resistance of around the 300 levels in the near term.
Okay, moving on, and from the fertilizer space, Lisa, you have picked up GSFC, that's down about 4%. Tell us how are the numbers this time?
Right, so GSFC, like other chemical companies, even this is under pressure. So it's on the back of a weak set of numbers. The revenue was down 32% on year-on-year basis at 2,063 crore. PAT was also down 68% on year-on-year basis. Well, on the outlook, the management said that on the back of good monsoon, they expect that healthy demand will continue, will be there for fertilizer segment. The global prices of fertilizer as well as raw material prices, that has bottomed out now. And the numbers that was impacted by the annual shutdown of ammonia as well as other plants, but that is already over, and the company expects consistency in production at their Baroda as well as Sikka plants. They said that the fertilizer outlook, that is quite stable, but on the industrial products front, volatile market conditions, international market conditions, that is likely to squeeze the margins going forward. So on the back of this, management said that they will be continuing to optimize the product mix to mitigate this impact. Well, the stock is seen reeling under pressure. It's down around 3.8%, but not only today, in the last 5 days, the stock is down around 10%. So that's on GSFC.
Okay, keeping an eye on GSFC. But let's move on and talk about IOB on the charts then. And Nagaraj, how is IOB looking? When you look at 1 year, yes, 53% return is what it's given. But last 3 months, 6 months remained almost flattish. What's the view now on IOB?
Yeah, of course, this last 3-4 months, the stock price has subdued its moment. Recently, we have seen some activation of the upside momentum. Higher tops, higher bottoms has been formed, and it has placed at the trendline support of around 25, currently placing at the hurdle and making an attempt of moving above the hurdle of around 2750, 2800 levels. Whole PSU banking charts sector itself is looking promising, looking positive. I'm expecting this stock to move higher in a current in a coming weeks, and I'm expecting the initial resistance of 28 is going to be taken out, and on the upper side, on that happening, this stock is likely to reach towards the next resistance of 30 in the 1 month.
Okay, so that's the take coming in on IOB. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back with more stocks that are buzzing right now.